All right. Let's do a sound check. Right now you see just kind of a webinar description, hopefully, on the screen. And the NinjaTrader platform in the background. If we could, Morgan, oh, awesome. Thanks for being here. Thanks for being here. So let's do one more sound check here just to make sure everybody could hear me okay. And then we'll get started in about 2 minutes. We won't delay. We'll get started right on time. Dion, thank you. Morgan, thanks for that tip this morning and that kind email. I worked it out, and it worked just exactly like you described. So I appreciate that. Morgan was in our earlier live trade setup event this morning that we did. Sarah, hi, how are you? Thanks for coming. Jerry? Okay, this is a crazy name. I'm going to call you NCAP. NCAP, welcome. Thanks for being here. On the YouTube side, I don't hear any noise on the YouTube side. If you're on the YouTube side, type in hello. And then I'll know we'll be good to go. We're going to go anyway in 1 minute. Get started here right on time. A couple other adjustments here really quickly. All right, let's officially, RN, thank you. Thank you for saying hi. I appreciate that. Let's officially go ahead and get started here. My name is Jim Cagnina. I'm the Senior Education and Training Specialist for the NinjaTrader platform. Today's event, top 5 indicators for new traders. Before we begin, though, I do want to remind everybody that trading futures options on futures involves substantial risk of loss, and that's suitable for all traders and investors. Oftentimes in futures trading, we have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and basically doesn't overly stress me out. That's kind of my personal definition. Everyone's unique in this world. That is for sure. So just be careful with that. If you're not sure, just be easy on the day trade margins because you get a lot of leverage with futures trading if you so desire. I'm going to be logged into the a real-time sim account on the NinjaTrader platform with real-time data. So thanks for coming in. Feel free to ask questions as we go and type into the question and answer box. I'd be happy to talk to you about it. And so we're going to end up with a chart that looks like this. And I'll start from scratch. We'll build a new one from scratch, and I'll kind of explain all the different components that go into it and what I'm thinking. It's not very complicated. It might look a little bit complicated if you're brand new to futures trading. Or if you're new to candlestick charting, but once we go through it, I think you'll see how relatively easy it is. So let's go ahead and get started here. And when I say top 5 indicators for new traders, it's really these. I don't think I'm a new trader. I've been around for a couple of decades, and this is pretty much my setup as we see it. As we're going to see it shown today. So try to keep it simple. What I'm going to do is I'm going to open up a brand new chart, okay? And it's going to be a 10-minute chart. Each bar or candle, it's time series. Each one's going to, each bar is going to represent 10 minutes worth of price action in the market. And I'm going to maintain all the regular settings here in the NinjaTrader setup area here. Value is 10 minutes and it's a minute chart. If I wanted to, I could make it, a daily chart, a weekly chart, a second chart, range bars, volume bars, tick bars, all sorts of stuff. But we're going to keep it simple. 10-minute chart for day trading, and I'm gonna hit OK. And it's going to open up a brand new window here. And let's go ahead and expand this window. So that's all we see. So these are candles, right? This is a candlestick chart. And it's really the same as an open, high, low, close chart. And I'll show you what I mean by that. Let's just go to open, high, low, close chart. I'll toggle over there. And what it just shows, it's each single line represents 3 different prices, right? So the bottom of the candle represents the low price during that 10-minute session. The high of the bar represents the high of that 10-minute session. And then the left hashtag represents where the price at which the bar started, the opening price. And then the right hashtag represents the closing price. Now, since this bar is not closed yet, well, it's moving around, right? It's moving around until a new candle, to a new line, a new open, high, low, close bar opens up. Then we'll get a new one. It's color coded, right? So if the open price is below the close price, it's green, representing upward price, and if it's red, the open price is above the closing price, and that represents, price going down. Now, candle just fills in the gap. It just puts a body between the open and the close. And so let's just toggle back over there so we can see it better. So it's just a better graphical representation, right? Because remember, let's take a look at this green candle. The open here is at the bottom. The close is at the top. This wick or shadow represents the high of the move, and the wick at the bottom represents the low of the move within this 10-minute increment. Every 10 minutes, we get a new one. Okay, every 10 minutes. So that's kind of basic, candlestick layout. And, it's a lot of folks use candlestick. It's very popular. It could be traced back to the Dajome rice exchange from 1667. You might recognize the word doji and Dojima rice exchange. So this technique has been around a long time, and it kind of gives us a graphical representation of where buyers are coming in and where sellers are coming in and where the pressure is. This fight between supply and demand that goes on happens. So I'm going to go ahead and add the first thing I'm going to add is called a moving average cross, and I'm going to kind of go slowly and add it in components. So I'm going to right click on my chart, and I'm going to get an indicators drop down menu, and I'm going to click on the indicators drop down menu, and then all of the indicators available in NinjaTrader on the left hand side. And I'm simply going to scroll down I'm going to find a moving average, right? There's all sorts of different kinds of moving averages. There's simple moving average, there's exponential moving average, there's Wells-Wilder moving average, there's Hall's moving average, there's double, triple exponential moving averages, and all their equations are a little bit different, right? They're a little bit different, but I'm going to go with a simple moving average. An example, it's exactly what it sounds like. It's a simple moving average. So it just averages prices. So I'm going to select it in the available area, and I'm going to hit add. And so I'm going to add my first moving average, because at the end of the day, I want to have what's called a moving average cross. And I'll talk more about what that means in a second. Once it's down here in the configured section, I could highlight it. On the right-hand side, we could change, different parameters. And so the period is the first one I'm going to change. And I'm going to change it to a 6 because I have a 10-minute chart. I'm sorry, I failed to mention that. In the upper left-hand side here, you can see 10-minute. I did mention it, actually. So since it's a 10-minute chart, I really like the 6 period is the first part of my moving average cross. In my setup, I'm going to change calculate to on each tick. So every time a price changes, that moving average is being recalculated in real time right in front of you, right in front of us. And then the last thing I'm going to do is I'm going to go ahead and change the color so we can see it a little bit better. I'm going to change it to red, and then I'm going to hit apply and OK. Now you can see this red line that's kind of painted. It's kind of curvy. It's choppy. It's moving up, oscillating up and down, moving around. That's the moving average, right? Simple moving average. It's a 6-period moving average. Now to make a cross, I want to add another moving average. Okay, and I'm going to use a different parameter for the next one. This first moving average, I used the 6-period moving average, and I'm going to call it my fast moving average because it only calculates 6 data points of data to establish the value. And that's not a lot of data, right? So it could move quickly if the price goes up fast, goes down fast. It could move faster than a moving average cross that that calculates more data points, or a slow moving average. So I'm going to add my slow moving average with the same process. I'm just going to go ahead and right click on indicators. I'm going to go ahead and highlight simple moving average again, SMA. I'm going to hit add. And now I'm going to change this parameter period to 26. So I want to calculate 26 data points here to come up with my average. And I'm going to call it my slow moving average, only because it's going to be less sensitive to the mark-to-market price that we see on our screen. You can see it in the black label on the right-hand side. As that changes, it'll be less sensitive relative to the faster 6-period moving average, because there's more data it uses to calculate the average. Can't calculate on each tick. And I'm going to change this color to, I don't know, we'll change it to blue. So there, I've changed it. So now we have, and it's smoother, right? It's going to be smoother because, again, it's calculating 26 pieces of data to come up with the moving average. And it's moving because every as the price moves, the actual moving average will move. And when we get another candle, it'll move forward also. So that's why we call it that. Now, it's a little bit cluttered right now. So I've overlaid it on the chart and it doesn't look that great. So I'm going to move this whole moving average cross to its own area on the chart. And I'm going to right click, and I'm simply going to go ahead and go back to indicators. It opens up my indicator box. And then on the bottom here where it says configure, I'll select my first one. And what I want to do here is I want to change the panel, right? I'm going to change the panel. I'm going to create a new panel, right? And think of panels as like an area on the chart. And so right now, the panel we see right now is panel 1. I'm going to create a new one. This is going to create panel 2. And I'm going to hit apply and OK. And it's going to move it down here to its own space at the bottom, so it doesn't interfere with the candle and it doesn't clutter up my chart. And I'm going to do this exact same thing with my slow moving average. Again, I'm going to go to indicators. With the NinjaTrader software, once you do this once, you save it and you don't have to do it again. But I want to walk you through how to do it. I'm going to select the 26-period moving average, and then I'm going to go back to my panel. Now, I'm not going to create new again because that would create a third panel. But notice here now there's a second panel, right, at number 2, which is the one I just created with the other moving average cross. I'm going to select it. And I'm going to go ahead and hit apply and OK. So I've, in essence, moved my moving average cross down to the bottom of the chart. So how does this help me? So I look for a couple of things in a moving average cross, right? And really, this is kind of I look for a change in direction. I look for what's called a cross over or a cross under. And this is kind of textbook. Everybody looks at this also. And let's start way back here around 5 o'clock in the morning, where the fast moving average started changing and crossed underneath the slow moving average pretty rapidly, right? And so this suggests to me that there's downward prices are accelerating, and it is a delayed indicator for sure. So it's not giving us an absolute sell the market here, but it's information that we could use with along with the rest of our indicators to come up with trade ideas. So that's kind of number one. And we look for that cross. Let me get our crosshairs out. And it happened right here. Right? It happened at this candle, right? And you really don't get confirmation until the next candle. So in this particular case, maybe the cross was a little bit too delayed and it couldn't really help us, right? It's telling us, hey, you might want to consider going short right now because the market is breaking back down. But really where the information gets interesting is before the cross, when you see the difference between the two starting to converge, right? So the fast moving average is crossing under. Before it crosses under, it's starting to converge. In other words, the distance between these two is getting smaller and smaller and smaller and smaller, and it's happened repeatedly since the top of the move all the way down. So this is a good thing to look at to kind of say, all right, this is giving me some information to suggest that maybe things are starting to move in a downward direction because the fast is moving toward crossing the slow. That's kind of number one. That's the second thing. And then same thing on the other side, right? So we had the moving average cross above, suggesting that prices are going to appreciate. And you really don't get the confirmation of that until the next candle, which in this case would have been the 830 to 840 bar, which I have lined up on my crosshairs. And then we had a continuation with a divergence, right? The fast was diverging, which is also another indicator, another part of the indicator to consider. Is the moving average cross diverging or converging? And where is it in relationship to the cross? Those are the two things. That's the two things that I would like to use. And we'll put this all together when we look for a trade idea at the very end. And we have all of our indicators up. So any questions on this at this point? Is everybody with me? Okay, so let me kind of squish this down. The second thing, 2 of 5, we're going to go with indicator 2 of 5. And 2 of 5, and 2 is going to be an oscillator, right? They're called oscillators. And again, they're lagging indicators. And there's all sorts of different types of oscillators that are available to you on the NinjaTrader software. And it's really a personalized experience, right? So I have my favorite one. Your favorite one might be RSI, it might be MACD, it might be the Arun oscillator, Chaikin oscillator, Awesome oscillator. There's all sorts of different kinds of oscillators. And oscillators generally oscillate around a middle line. In case of the commodity channel index, the CCI, which I'm going to add to my chart, is going to operate, it's going to oscillate around a zero line. And the idea is to come up with areas that are overbought, areas that are oversold, and then also look for velocity and price movement, which is what I really like to do. So CCI, I've added that to my my indicator list. And again, you could do RSI, you could do MACD, whatever you're comfortable with. This is the one that I particularly like the best. I'm going to change my period to 20. And again, this is my preference on a 10-minute chart is to change it to 20 instead of the default. I'm going to calculate it on each tick. And then I'm going to change the colors a little bit here so we can see it a little bit better. We'll change it to, I don't know, we'll change it to green. I'm going to go ahead and make the width of the line 2. And one other thing is I am going to create it also in a new panel because I don't want it interfering with the other information on my screen. So this will be the third panel, panel 3, new panels, panel 3. So a couple of other areas of interest are the 100 level. 100 level is dark gray. I'm going to make it black so we can see it a little bit better, or we'll make it, yeah, black sounds good. And then the other area of interest is minus 100. And I'm going to go ahead and do the same thing with that. And we'll go ahead and make that black as well. And I'm going to hit apply and okay. All right. And so now I'm going to kind of just move it up here a little bit. You can see the green line, right? The green line oscillating up and down. And this is the CCI. This is the oscillator that I'm talking about. And it oscillates around a zero line. And, maybe if we wanted to kind of see the zero line better, we could actually highlight that as well. And let's do that just to make it easier to see. Zero line, we'll make the zero line red. And I'll also make that a 2, right? We'll make that a 2. So we can see a little bit better. All right, so here's my CCI. Left-hand side, it says it's based on a 10-minute chart. Its period is 20. And again, I'm looking for crosses, right? I'm looking for crosses. Sorry about that. I'm looking for crosses at a couple different levels, but particularly the zero line, right? So when the CCI comes from a positive state to a negative state, it's going to cross below the zero line. And alternatively, when the CCI comes from a negative state to a positive state, it's going to cross over above that zero line, right? So that's kind of number one, what's happening at the crosses. And, let's go ahead and just line this up and look, the 420 to 430 bar. I'll throw my crosshairs there. We crossed down, we crossed underneath it, and I had confirmation on the second candle, not the actual cross, because sometimes it touches and just bounces off it, but we have confirmation by the end of the second candle, and sure enough, that was good information, right? It's saying, hey, the CCI is oscillating downward. We're having some downward pressure on pricing, and sure enough, that's kind of what happened, right? Now, it doesn't always happen that way. Remember, past performance not indicative of future results, but this is a good example of it, giving us some good information. And then it continues on down into a pretty decent negative level here, a pretty extreme negative level here, minus 370-ish, give or take. So that was and it kind of followed along the path of the actual prices kind of depreciating and going down. Alternatively, let's go over to a crossover. And here's a good example of kind of a failed crossover, right? So, we went from a negative state to a positive state. We have confirmation at this particular candle, but it didn't really gain momentum, right? So if you were to say, hey, I want to buy a contract here because the CCI crossed over zero, that wouldn't have worked out so well, right? Because it just kind of puttered out of steam, and that happens a lot. So again, it's just another piece of information to use in conjunction with all of your technical analysis, all grouped into one. Okay, so that's kind of number one. Number two, there's 100. Remember, we made the 100 line black and the minus 100 line black, right? And if you read a textbook on this, they're going to tell you, hey, when the CCI is over 100, the market's considered overbought. When the CCI is less than 100, the market's oversold. And in my experience, especially with respect to an intraday chart, that doesn't help me much, because even here at the overbought level, let's say we subscribe to that theory, CCI is really positive, 230, it's overbought, which suggests it's time to sell. Well, that trade idea wouldn't have worked for a long period of time. It would have been a bad idea. So instead of this idea of overbought, oversold, what I look at is, hey, the market's pretty strong. We're over 100, and the velocity of this line is way more important to me, or the slope rather, is way more important to me, because it tells me the velocity, right? The steeper the slope and the longer the slope, the more velocity that you're going to see in prices on the candle. So this is a really good example of really strong velocity shooting up north for a very long period of time. So it's, starting from the bottom, 1, 2, 3, 4 candles before we peaked on the CCI, and sure enough, that the candles reflected that strength in that particular move. So forget about overbought, oversold. Focus on strength and focus on the slope of the move and how quickly it changes the state. The later evening one went from a positive 100 state relatively quickly to a negative 100 state. That's a pretty powerful move down. So that's kind of that's the second thing I like to look for. What's going on with the CCI? Right? What's going on with the CCI? All right. So next, the next thing I'm going to throw on here is going to be what's kind of unique to futures trading. It's called volume profile, right? And it's unique to futures trading, and it's because these markets are transparent and liquid, and it's based on a regulated exchange, first in, first out kind of trade allocation. It's fair, and you could see everybody could see all the information that everybody else sees, whether you're in New York or in Los Angeles or in Hong Kong or Brazil, wherever you're at, you can see all the same information. So we're going to go to what's called order flow volume profile. I'm going to go ahead and tap that right there. And there we have it. I'm going to actually, there's a trick here. Instead of clicking the add button at the bottom, which you could certainly do, you could also just double click. And by double clicking, it'll add it to the bottom also in the configured section. So if you're new to NinjaTrader, it's pretty easy to do. Lee is here again. Don't worry about being late. It's all good. So there's my my volume profile. Now I'm going to go to the left-hand side and take a peek here. I'm going to keep most of the settings the same, except I'm going to make some changes. I'm going to calculate again on each tick. I am going to leave all of the stuff the same. I'm going to change ticks per level to 4, because I think I could explain it a little bit better when I do that. So I'm going to put 4 there. And then all the way at the bottom, I'm going to go ahead and click Show Volume Labels. And we're going to hit, check that. I'm going to hit Apply, and I'm going to hit OK. So now it's added this kind of funky looking histogram bars turn sideways, if you will. Histogram bars turn sideways. And what this shows is for every 4 ticks, and remember, a tick is the smallest price increment, right? In this particular market, there's 4 ticks to a point. So if we went from 45.68 even to 45.69 even, that would be 1 point or 4 ticks. So I have the histogram bar set up basically to capture a point, and every single point, when it trades within that 4 tick range, it just calculates volume. It adds volume, and you can see it moving here on the left hand side, 61, 133, and it kind of keeps adding the volume as more contracts are traded at that particular price level. And so the histogram bars are, like a trombone, right? They expand. Well, they don't never contract, but they expand as more volume is added at any given level, creating this profile looking thing. What does that tell me? How does that help me? Well, right now, if you look at it and you remember your high school math, and this is very much, it looks like a Gaussian distribution or a bell-shaped curve, right? And the dark blue area there it's called the value area, and it's simply one standard deviation worth of volume, right? One standard deviation worth of volume. And I started my count at the beginning of the session, which was last night at 6 o'clock. And I ran it all night, all morning, all day up until now. It's a 23-hour trading session. This shows me all the volume traded at these different price increments throughout the whole session. And so by the time we get to the end of the day, then there'll be more volume, and the distribution will look a little different, right? Because we'll trade at different prices. So we have the value area, which is one standard deviation. And then we have this gold bar in the middle, which I color-coded gold, and this is called the point of control. Now, the point of control is simply just the longest histogram bar. There's no magic to it. It just, there's 73,816 contracts traded there. And that's all that means. It's just point of control. It's the longest histogram bar, right? But that's a point of interest to me. And I'll tell you why in a second. That's a point of interest to me. The other 2 points of interest are the top of the value area, the transition between value and these light blue lines up here, which someone creatively called prices above value. So not a lot to that, but prices above value are the light blue. At the bottom, there's a transition between the bottom of the value and these blue histogram bars, which you got it, prices below value. And so that's the other area of interest. And I have these extension lines drawn out so we could see what those given prices are. And on a normal distribution day, the idea would be, hey, we want to sell at the top of the value area, we want to buy at the bottom of the value area, and we want to hope we get back to the point of control. Let's just take a look at this point of control for a second here. Let's look at how many times it's traded at this point of control. Not the last 2 candles, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of the 12 previous candles are traded there. And the point I'm trying to make is, and this doesn't always happen, but oftentimes it acts like a magnet, right? It acts like a magnet. The point of control kind of attracts it, because what we're thinking is this is price happiness. There's all sorts of different types of traders that come into the market. Whether they're individuals like us, whether it's retail traders, whether it's institutional or hedge funds or banks or whoever it is, are all expressing their opinions and making their investments and making their trades. And what this tells me is, hey, there's definitely some price happiness that happens down where the most volume is traded, right? And the most volume, again, is traded at 64.50. I'm going to put my crosshair so you can see it better, 45, 64.50. And is it reasonable to think we'll trade there again today? Well, I think it's reasonable. Now, it might not trade there again today, but I definitely think it's reasonable. So in any event, that's the point of control, right? So sometimes these profiles aren't quite so clean, right? Sometimes they're skewed upward, sometimes they're skewed downward, sometimes there's a double distribution, which has like a peak at the top and a peak at the bottom. But today we're lucky; we got a really clean, neat-looking profile. Let me just kind of double check to make sure this is all working behind the scenes. And it is. Okay, so that's that. Let's go to number 4. And we're going to put it all together with the trade idea in a minute, but let's just go to number 4 here. I'm going to right click, and I kind of want to see what happened yesterday, right? I kind of want to know what happened yesterday. So I'm going to go down and select and this isn't, I guess, I don't know, you could argue this isn't an indicator, this is just a piece of information, but you could add it to the chart. It's called prior day open, high, low, close. And I'm going to add that, and we'll go ahead and highlight it. Now, what I particularly want to see is I want to see where we closed yesterday. I want to see yesterday's high. I want to see yesterday's low. I don't care that much about yesterday's open, so I'm going to unselect that one. It's just, you know, I don't really care about that. I mean, you might care about it. I don't care about it. It's just the way I am. So under setup, calculate bar and close. It doesn't matter. It's the data's fixed. It's already done. So you don't have to change that. And then I just want to note my colors, right? So close is purple. Yesterday's close is going to be purple hash. Yesterday's high is going to be green, and yesterday's low is going to be red. And I'm going to hit apply and OK. All right. And so what we could see yesterday's close, you know, right here at 60. We could see yesterday's, yesterday's low is red. It's 60 and 3/4. And then here we have the purple hashtag 63.25, which is yesterday's close. And then somewhere up here is yesterday's high, way up there. Okay, so how does this help me? How does this piece of information help me? Well, because it gives me more areas of interest, right? The more areas of interest I have, whether they're psychological or technical analysis based, the better off the more I'm prepared to leap into action, right? The more I'm prepared to come up with a good trade idea. So that's number 4. That's number 4. Number three is a Fibonacci retracement, right? So I'm going to go to my drawing tool in the upper left to add this one. This isn't really an indicator. It's more of a drawing tool, but there's a method to the madness here. So if you click on the Fibonacci retracement option, you want to start from the low, from a swing low to a swing high, or a swing high to a swing low. And since we're kind of, it's a tough call on how to draw this one today, but I'm going to take this low. Right, to see the bottom of this particular candle here, which is the 6:50 to 7 o'clock bar. And I'm going to go ahead and click once right at the low. And then I'm going to drag my mouse all the way up to the high, which is right here. And it's going to create what's called a Fibonacci retracement. And thanks to Morgan, by the way, I've made mine the way exactly how I want it. So thank you for that, Morgan. And it's adding these numbers, these weird numbers here, right? What are these numbers? So it started out at 100, it ends at 0. And as the market trends, you get to a peak, and then it retraces, right? And the idea, it's called a retracement, right? And there's these different levels of retracement that are here on the chart. And, you know, most markets, you know, they'll trend and they'll they'll oscillate, right? There's volatility, you know, prices just don't tick up nonstop forever, or don't tick down nonstop forever. There's movement up and down. And so what we want to do is capture that movement in relationship to the range that we identified here. And I'm being kind of liberal here in my range. It's basically the daily high low to the daily high. From this particular point to that particular point. Now, the numbers themselves are ratios, right? The golden triangle, the golden rectangle, or the golden ratio, I guess they're called. If you remember from math class, you take a 0 and 1, you add them together, you get a 1. You take a 1 and you add it to the previous number, which is a 1, you get a 2. And then you take that 2 and you add it to the previous number, you get a 3. And then you take that 3 and you add it to the previous number, you get a 5. 5 plus 3 is 8. 8 plus 5 is 13. 13 plus 8 is 21, and so on and so forth. So you get this Fibonacci sequence, right? And it's a recurring, you know, in nature, the sequence reoccurs all the time. And, you know, the Nautilus shell is the famous kind of example people give you. Thank you, Lee. Said I pronounced Fibonacci right. I appreciate that, because in previous events I didn't know how to say it. But anyway, I get a lot of help from my friends at these events. I greatly appreciate that. And anyway, when you take these sequence numbers and you start dividing them, amongst each other, you know, the 13 divided by the 21, the 5 divided by 8, you keep getting these percentages: 23.6, 38.2, 61.8. 161.8 is another one. So these are kind of recurring things, and traders started applying these to charts at some point. And it's a little bit odd, but it does seem to provide additional areas of interest, which maybe has a self-fulfilling prophecy, because not everyone, a lot of folks use Fibonacci as part of their analysis. I'm not the only guy with this on my screen. There's thousands of folks, my guess, that have it on their screen. So it does become kind of a fulfilling prophecy a little bit. The 50% number is not really a fib number, but it's the midpoint, and it's been kind of adopted as a standard practice. So it's in there. We're going to keep the 50% right there, and we're trading right at the 50% right there. So that's kind of the next one, right? So that's kind of the fifth thing, right? So we talked about oscillator, a moving average cross, volume profile, yesterday's open, high, low, close information, and then a Fibonacci. And you could draw your Fibonacci different ways depending on your point of view. This is the way that I particularly drew it. And again, it gives me areas of interest, and these areas of interest are at the actual retracement levels. 23.6 is interesting to me. 38.2 is interesting to me. 50 is interesting to me. And 61.8 is interesting to me. So these are numbers we could use to create trade entries and trade exit points and entry points. So, and a lot of times you'll see these fib numbers are in perfect alignment with the point of control or the transition between prices above or below value. Now I'm going to make one little adjustment right here. I'm going to right click. I'm going to go back to indicators, and I'm going to change my period for my volume profile from a 4. I'm gonna make it a 2. So I just want to track every 2 ticks. Each histogram bar is going to be 2 ticks tall instead of 4 ticks tall. And it's going to kind of condense it a little bit to give me a little more granularity in terms of order entry ideas. Okay, so assuming we already did our analysis this morning and we decided, hey, we looked at a candle, a daily candle, a weekly candle, a monthly channel, and we said, okay, the condition of the market is bullish, which I think it is. So we're going to be looking for places to buy today. Then we're going to factor in, okay, what economic releases already happened, and did that affect my bullish bias? And my answer is no. We had some durable goods come out this morning and some other things. And there's a whole bunch of earnings coming out right now as well this particular week that we have to keep in mind. Those are kind of planned things that we don't know what the answer is until they're released, right? So they could affect prices. So now that we're at that point, it's like, all right, so how would I use this particular information? Well, let's take a look at the moving average cross, right? So we're kind of trading below. Let's take a look at that one first. We have a little bit of a divergence. The fast moving average is below the slower moving average, and so that's a little bit negative. The CCI is crossing below the 0, not incredibly quickly, but a little bit at minus 18.56. It's a little bit negative. Not a lot though, because it's been oscillating sideways for a long period of time and hasn't really generated any excitement since really early, since the open this morning, or since that 5 o'clock to 5:10 bar. Really early this morning. However, it's not really bullish right now. So now it's not unreasonable to say, all right, I would like to consider maybe making a trade since these are kind of suggesting some negative areas. We're really far away from yesterday's high. We're really close to yesterday's close and yesterday's low, and so I would like to get short. Where would I like to get short? Well, I'm going to use my chart to place a trade idea. I'm just going to go ahead and let me make sure I have my chart trader set up. I don't. Let's just go ahead and add that. And I'm going to hide my chart trader again, but I'm going to be able to use it, right? So I'm just going to go ahead to the 38.8, and I'm going to line it up to the volume profile and say, yeah, there's a lot of volume up here. There's a lot of meat and potatoes up there. So if we could get back up to that 38.2%, I'd like to sell a contract. So I just I'm in real-time sim mode right now, but if this were a live account, this order would have been sent to the exchange and it would have shot back on the chart as confirmation as a limit order to sell a contract right at the 38.2% fib number. So that's kind of one idea. If you were going to be more aggressive, someone might say, well, I want us to be at the 50%, which is closer to the point of control. And that would be another possible area of interest with respect to this. And again, the rest of the information I'm getting is not incredibly bullish right now. So I would probably wait to see what happens next. But if you were, let's say you would like to, buy a contract at a certain point, where would be some good areas of interest? Well, we have this area here at the bottom of the value area, 45.62. We have the low of yesterday, and forget about the candle formations for a second here. Maybe this would be a good place to buy a contract, and I'll go ahead and do that. So again, another limit order to buy a contract based on that area of interest, and then we could kind of do the rest of our analysis that we do with respect to where is support, where is resistance, and all of that other good stuff. All right, is everybody with me? Bots asks, have you ever tried changing the line that shows the CCI to bar instead? I found it somewhat easier to read. The answer to your question is no, I haven't, but let's see if we could do it. I don't know. We're breaking new ground here. This is the beauty of coming to my events. You never know if we're going to be able to figure it out. Period, calculate, label, visual, displacement, panel, price marker, scale justification, visible. My guess is, because this is NinjaTrader, there is going to be for sure a way to do this. So bear with me and let me see if I could figure it out. And if any assistant, hey, Morgan, are you on this? Just kidding. I'm not sure, to be honest with you, to answer your question. So I will do the research necessary to figure that out for the next event, for sure. Scale justification, right? Visible, right? So I understand what you're saying. He's whoever asked that question is saying, oh, Morgan's saying yes. Sweet. Everyone's saying yes. All right, good. We could do it. In any event, I don't want to waste everybody's time me trying to figure it out. But yeah, so this, you could make that a histogram bar instead of actual line. That was the question. Okay. All right, let's see. So Lee, all right, so Lee says, Jim, would you be able to put some links on as to where you get your fundamentals from? Are you referring to like the fundamental analysis, like, when is CCI coming out, that kind of thing? One place to start, there's many places, and if this is your question, is Econoday, econoday.com. It has this calendar on here where you just click full calendar, and it'll show you kind of what's going on that day. We had NBA mortgages today, durable goods, international trade, retail, wholesale inventories. Tomorrow we have GDP, could be a big one. Jobless claims could be a big one. Hint. And then natural gas, if you're trading natural gas or the energy complexes. And then when you click on these things, so let's click on GDP for tomorrow. What they'll do is they'll tell you, hey, here's what economists are saying, is the consensus range for the number that's coming out. And GDP is usually really good at consensus range, but this is a big range for tomorrow. So there's going to be a lot of uncertainty there. And then the Kansas City Fed has a tool that you could download on your cell phone, Kansas City Federal Reserve Bank, that also does an estimate on GDP, which is it's really projecting lower than this particular consensus for this particular number. But so that's one place to do it. Another place is, and I hate to say this because I'm a subscriber to the Wall Street Journal. They have a lot of good information. It's amazingly good information that there is in the Wall Street Journal. And you can get what earnings are coming out, if it's an earnings season. Are they NASDAQ heavy on the earnings? Are they S&P heavy? Are they those kind of things? So, and the subscription is not very expensive. It's and there's some good stories in there as well. All right, wait, Morgan is chiming in. On histogram on CCI, I use solid instead of dash line. Let's go right click. Let's go to indicators. Let's click on that CCI. Oops. Nope, I'm sorry, down here, CCI. And then I use solid instead of dashed line style. Okay, so here's solid, 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 solid line. Plot style. Let's see if this does it. Am I in the right spot? I don't think I'm in the right spot. Point me to the right spot. No, above that. Okay, so up in this area in visual. Under CCI, okay, under CCI. Aha. We already have solid though. Dash dot dot dash. It says dash style here. I'll keep this up to see if I can get some better help. I mean, not that your help's not good. I'm just a little. These inline corrections are gonna kind of take me off my game plan a little bit. Let's take a look actually at a trade idea on the chart as we are moving forward here. We have some time here, so we're approaching. So let's take a look. The other thing that I'm going to say is, I really want to look for areas of support and resistance. And now that as we are approaching our 38.2% up here, we're still kind of far away, right? We're still, well, not really far away. There were 5 or 6 handles away. Things are slowing down. It's lunchtime. But another kind of handy trick that I found out was basically trying to identify in areas of contemporary or short-term support and resistance. And I'm going to draw a rectangle here, right in this area right here. And let's just go ahead and make it a little bit easier to see. Outline. And we'll make the width 1 so it's not quite so obnoxious. Okay, so this rectangle that I drew here, what I try to do is capture the actual top of the bodies, right? And then I drew it up, I don't know, 8 or 10 ticks, and I'm saying we haven't had a candle close in this area for quite a bit of time. And therefore, I'm going to call this area an area of resistance, right? The market can't get higher recently in this area of resistance. And then you could do the same thing on the bottom side, right? So I'm just going to go ahead and copy, paste it, get a second one, and just kind of drag it down here. And I'm going to go ahead and pick this level right here. And you can go a little bit more conservative if you want and say, okay, this is kind of the intermediate, actually, and that's so it's a area of support, resistance at top, support down here. And so now I've kind of framed the conversation a little bit, and it should help me actually with my entries and exits once I've established a position as well. So this kind of completes the picture for me on how to look for trade ideas. And right now we're kind of in patience mode right now. And again, my order here that we identified a little bit south here is just perfectly in line with the middle of the rectangle, which is also pretty good. Okay. All right. Anybody? Yeah, my volume profile settings. Sure. Let me just kind of show it again. I'm going to right click. I'm going to go ahead to indicators. I'm going to go to order flow volume profile on the configured section, and in the properties window, here they are. So again, calculate on each tick, profile type volume. I'm going to keep it there. You could change any of these if you want. Standard display mode. If you want to see the buy versus the sell volume, it will color code the histogram and say here's the volume that happened on the bid. And then here's the volume that happened on the offer. Now we could do that. Let's just go ahead and it'll take a second for the data to come in here, but let's go ahead and apply that and let that populate. Sessions, I may keep the same. Ticks per level is that number that I changed. Remember, from 1 to 2, and try to keep it in even increments with the. Try to keep in even increments with the actual contract tick size. So, for instance, crude oil is traded in tenths, right? And not in quarters. So I wouldn't set it to 4 because it doesn't make sense. I would set it to 5 or 10 or something that's divisible into that 10. Visual, all of this stuff is pretty much visual. Oh, value area 68%. That's that one standard deviation, right? You could change it. Some traders do and say, well, I want to see a standard deviation and a half. I want to make it 78 instead of 68. I've never changed that. And then all this stuff is color coded. And you can come down to the bottom and I added show volume labels. That's not standard. I clicked it to make it standard. Hit OK. And now I've the histogram bars are all the same height as they were when they were blue, except it shows the relative size of trades that happen on the bid versus trades that happened on the offer. So some folks find that handy. Some do, some don't. In any event, any other questions, type them in. No, Dan, I don't have a template for this particular chart that I shoot out to folks. But again, it's 5 things. It's pretty easy to set it up, and by setting it up too, it kind of helps with my thought process. When you do close the NinjaTrader software, make sure you don't close the window. Close the control panel. This will close everything and memorize all of your settings. So don't close any individual window, whether it's the Superdome, the Market Analyzer, any of your charts. Just close once you have this laid out how you want it, close it up from there, and then it'll memorize everything for you. Okay. Any questions, any follow-ups, anything anybody wants to talk about? Hope, love, dreams, anything, type them in. We're gonna we do a Tuesday and Wednesday live S&P trade setup event where I show this particular setup and we talk about entries and exits, and we try to get into positions in sim mode. And these presentations that happen at 12 o'clock Eastern time unfortunately correspond with the lunch hour. So a lot of times it's a low volume during the lunch hour, and there's not a lot of trade ideas are few and slow in between sometimes in this particular time frame. Morgan, good question. I don't think it helps me at all, to be honest with you. I'm probably not smart enough to know the answer to that, but the number of bids and asks, in my mind doesn't, the market's so volatile and so dynamic that I think that's stale information usually on a volume profile. That's just my opinion though. I mean, I don't know. I'm going to go back to standard. So thanks. I'm sorry I can't be more useful for that. I think this information here is a lot better. I just look at how many times has the point of control traded, what's the profile look like. This is really good volume profile trading today, given the fact that it's a bell-shaped distribution, that over time everything keeps reverting back to that point of control. Now the point of control is dynamic. It could change, right? Let's say we have some more volume up in this range. We're less than 1,000 contracts away from taking the title away from the gold bar, and it'll move up, right? So it is dynamic a little bit during the day for sure. Moving average cross is kissing right now. CCI is almost 0. Everything's neutral right now, so there's really no trade idea to leap into at this point. Yeah, so all the stock indices would be the same. The one adjustment you would have to make, so let me just show you. I'm going to switch over to the micro NASDAQ. And it memorizes my histogram heights. Remember, I had it set at 2, and sometimes in the micro NASDAQ or the regular NASDAQ, the range is so much bigger that it has to fit more price information on the screen, and individual histogram bars are harder to see. Now, you might not care that they're harder to see. because again, it's giving you a relative area of interest, right? It's not giving you an exact answer, but sometimes folks would like to change the settings back. Change it to 4 as an example for the NASDAQ, or 8 for the NASDAQ, since again, it's traded in quarters, the NASDAQ as well. So, but for sure, if you're looking at a stock index future, for me, it's critical for any market, whether it's, let's take a look at all the markets we have here. We have our market analyzer. I'm just going to move it up front here, and this just shows you all the different asset classes that are available. Stock index futures, S&P, NASDAQ 100, Russell 2000, the Dow. We even have a couple German ones. I have the FDAX up here. The Euro Stock 50 is another one that's traded in the Eurex exchange in Frankfurt. And then there's micro versions of the same contracts, which are just the exact same market, just 10. The contracts are just 1/10 the size. They're smaller size contracts, which really opens up the playing field for many more people to be able to participate in trading these markets. Currencies. These are currency crosses. You might be trading cash FX. You understand what a currency cross is. Aussie, British pound, Canadian dollar, Euro FX, Japanese yen, Mexican peso, all the way down. All the majors are covered here in currencies. Then there's some micro currencies also. Energy complex, a few of the popular ones are, crude oil, West Texas Intermediary, light sweet crude, and then natural gas. Ultra low silver diesel is another one that folks trade. Metals, gold, silver, copper, and then the entire yield curve, right? 30-year bonds all the way down to 10-year notes, 5-year notes, 3-year notes, 2-year notes, and the Fed funds overnight rate. That whole yield curve is available in the futures contract to trade, and have been all over the news lately. Micro Bitcoins are starting to pick up some momentum here. At least they're coming in my radar screen. I'm starting to look at them more and more. If you wanted to trade a futures on the Bitcoin, right? The futures on the Bitcoin, and then the grains, right? Corn's up $9 today, big deal. Oats, soybeans, wheat, all those kind of traditional commodity types of markets. So I wouldn't hesitate to use the volume profile on this whole setup on any of those particular markets. So Morgan says the major volume area is darker blue, right? So I have my value area colors darker in the middle, lighter on the top. And again, you can control the colors. If you want them reversed, again, just go back to the actual settings here, and then you could go ahead and pick colors down here to make them however you want. There's all these different settings here that you could play around with to make those exactly how you want it to look. Maybe you want orange and green. I don't know. Maybe that's your high school mascot. So I would just experiment with those settings, Morgan, and I think you can get those. YM is right up here under stock index. YM is right here. And it's a little thinner. Like YM is a little thinner. You could add it really easily. Just YM. Double click on it. It's a little thinner than some of the other stock index futures, but it's a widely tracked, blue chip. Everybody knows what the Dow is. You see it on the television set all morning long. And again, all these principles are pretty good here. Now we're trading right now at prices below value, right? The moving average cross is starting to converge. That's a good sign if you're thinking about going long. CCI is still pretty negative, but it's sideways. So there's not a lot of momentum going on there. And so if you wanted to go long, a trader might say, all right, I want to try to get long. And my stop would be, maybe somewhere below the lows of the day. It looks something like this. And then, the stop would be below the lows of the day as an example. And then my target would be the bottom of the value area. I mean, that would be a good kind of target if this was your trade idea. And that's how the trade setup would kind of look if I were to go long right now. And I don't know. Now that I think about it, I don't know that I wouldn't. I want to see this fast moving average get closer to the blue. I want to see the CCI start creeping over 0. And my entry limit order, is 10 ticks away from the market, I don't know that I would change it. So that would be another trade idea in the mini Dow, and it's a good contract, but from a volume point of view, let me just kind of show you what I'm talking about. I'm going to just type in YM right here and make that the mini Dow Dome. And on this side, we're going to change this to an E-mini S&P. And you can see the bids and offers here are in the single and double digits. And on the E-mini S&P side, the bids and offers are in the triple digits, right? So there's way more volume here, which usually means tighter bid-ask spreads, which is usually good for traders. You want tighter bid-ask spreads. So just, FYI, just be careful with the YM. I don't want to suggest for a second it's a bad market to trade. It's not, but it's a little less liquid. Okay. So order flow, this volume profile, it starts forming immediately, right? The very first bar in the morning, or I guess I should say in the evening last night, whatever the volume is, it starts accumulating, and it accumulates more and more and more and more. So as the day goes on, more volume is traded, and these bars get bigger and longer as the day goes on, for sure. But that's just the nature. If you go all the way back up here, that very top tiny little bar there, it traded there once. It looks like right around 3 o'clock to 3:10. And never traded there again. So that bar never got any bigger, right? There wasn't a time frame associated with it trading again, so it never got any bigger. Whereas, right down here, we're accumulating volume. Let's see, where are we accumulating volume at? Right down in here. So this area is starting to accumulate volume down here. You might not be able to see it because I have the histogram bar set at, it's too small of a level, but it is accumulating, and over time you'll see it change. Dean says, mine doesn't show up on chat. Do you mean on your software, or you're not seeing it on the YouTube chat channel or on the Zoom chat channel? Because it's definitely showing. Okay, so Morgan, good question. So here's the trading ladder, and there are a bunch of numbers down here, right? These are the bids. These are contracts that were sent to the exchange already at different prices to be executed as limit orders. On the sell side, these are contracts that are sent to the exchange already to be executed as sell limit orders, buy and sell. And it's called 10 ticks deep. This is a direct access level 2 view. Some folks' accounts are just set up for best bid and best offer. So you only see the first bid and the first offer. You wouldn't see 97, 134, 118, all these. And the reason traders do that sometimes is it's a little bit cheaper for the data. I mean, $20 cheaper or something like that a month. But it's important to folks. Doesn't mean you can't trade at prices outside of the scope of where those numbers are. You certainly can. I mean, as a matter of fact, I could place an order up here and it would be good, right? There's no offer volume up there either. But so it's really a personal preference. Do you want to see this data? Is this important to you or not? Some traders say it is important. Some traders say it isn't important. So whatever broker you're using, if you want to switch to 10 ticks deep instead of the best bid and offer, just ask them how to do it, and they'll tell you how to do it. But great question. So on your chart, I'm not sure why it's not showing up on your chart. So another quick trick here is in the help area on something like that, Dan. If you just go email support and just ask them that question, and if you want to actually even attach a screenshot, they'll get back to you really quickly, and they'll be able to they'll know your username and all that stuff to be able to diagnose what's going on. So you must have a checkbox or something that's funky. Okay, we're wrapping down. I just, as we wrap down, and I'm looking at the questions here. Hey, money management, how are you? I do want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in future trading, you have a high combination of leverage and volatility, and although that could be an equation for opportunity, it's also an equation for risk. So be careful, easy with the day trade margins. Looks like we did get, actually, it's even though we're past our time right here, looks like we had an execution. We're short one right now. We're short run, and then we have this, this order down here, dangling down here, and so we got to decide, where do we want our stop, where do we want our profit target to be for this particular trade idea. And I'll just, while we're at it, let's just go ahead and come up with that idea. And I'm gonna suggest above, our stop, we want to put a buy stop in, right? That's best practices. We're short one, it's color coded. We want the market to go down, so I'm going to use that 28.6% number because it's above the top of the value area. It's a reasonable area of interest. And I'm just going to go a little bit above it, and then I'm going to do a buy market stop. And that's there. And then the second part of this trade is, hey, where's the target? Where's our profit target? Well, that's, in my mind, if you want to be conservative, it's right at the point of control. If you want to be aggressive, it's at that 61.8 number. So again, it's just personal preference on how aggressive or conservative you want to be. And so the trade idea would look something like this. And you could, adjust stops as you go and all that and all that stuff. This green number here in the middle shows us how we're doing. So far we're 1 point or 1.5 points in our favor on the trade idea, and we can kind of keep track of it that way. Or you could also look at the top of the screen here where you have the control panel, and it'll show you our unrealized P&L, which is hey, if we were going to get out here, here's how much your P&L would be. Or actually, I think, which box are we in here? Let's see which account. Chart trader. We are in the sim account 1. Okay, yeah, sim account 1. That's going to show that, and then, but more importantly than that, actually, let me hide this again. Is it has our intraday margins and all that stuff for us as well. And so I have some other positions going on in this account. So that's why it looks kind of odd. But in any event, not odd, but the numbers are different than if I just had a position in one market. So I'm going to go by this label here. This is actually aligned with where we actually are short from, 68.25. That's the trade idea at this point. Things are really slow, so it might be sitting here like this for a long period of time. Nahemi, yes, this will be on the YouTube channel, NinjaTrader YouTube channel. Navigate over there, and you'll be able to find it. And Bree says, "What are the dotted lines on the chart?" Well, which dotted lines are you talking about? These ones. This was yesterday's close. Yes, yesterday's close. Yesterday's low. Yesterday's close. Yesterday's low. And the other ones are just extensions for the value area. That's all that is. Money Management says, today's market is very disappointed. I don't know if it is or isn't. I mean, let me just leave you with this idea. I'm just going to line up my cursor here at the top of the value area and say, how many times is it traded there? And I'm going to line up my cursor down at the bottom of the value area and say, how many times is it traded down there? And I'm going to look at this really good normal distribution and say, hey, there's probably some good opportunities to sell the top of the value area and buy the bottom of the value area throughout the day. A couple of times you might have got stopped out, maybe not. But I think today it was more of an inside kind of day in terms of opportunities as opposed to a trending kind of day. So we're only up 2 3/4. We're only up 3 handles from yesterday. And in these days, that's not that much. Okay. Patrick, how could I ask you to pick that short? Well, I tried to line it up with the 38.2%, and I have confirmation that there's a lot of meat here in the actual volume profile to suggest it was reasonable that we would get there. That's all. All right. Anyway, thanks for coming. I appreciate everybody being here. Hopefully we'll see you next week. We have a whole bunch of stuff lined up for us. Well, tomorrow, and actually tomorrow's a futures trading 101. So if this was a little overwhelming and you wanted to slow things down a little bit, you're brand new to futures trading, come tomorrow for the futures trading 101 session. And we'll try to make it even simpler during that particular hour. Thanks for coming, everybody. Take care. Remember, be safe out there and be good to each other. Thank you.